Hello traders, you're welcome to this video and I especially welcome you to the Forex Geek channel. If you are new here, then you might want to subscribe to the channel right away because we cover a lot of insightful topics in this channel, including Forex strategies, Forex indicators, and a lot of terminologies in Forex trading. Alright, so if you are coming here for the first time, then in case if you don't want to miss out on very insightful videos, then subscribe right away. All right, but if you are not a newcomer, then you are welcome back. Okay, let us get right into what we have for this video. We're going to be discussing the Madro Golden Filter Indicator. All right, it's a custom indicator, so you would need to download it, okay, and install it on your chart. But without wasting time, I'm just going to go straight ahead and load the indicator on the chart because I have already downloaded it. All right, so this indicator is quite an interesting indicator. All right, it's called the Madro Golden Indicator. And one thing with this indicator is that the indicator gives you alert. Okay, as you can see right here, the indicator gives alerts on the chart. So even if maybe you are busy with other things, so long as you have your chart open, when there is a signal, the indicator is going to give you an alert. You're going to hear a sound, right? You're going to hear the alert sound, and then you're going to see what the indicator is telling you to do. So one thing about this indicator is that it does not require a lot of experience. Okay, it's quite a nice indicator for newbies, okay, for beginners. If you are a beginner in Forex trading, this indicator will save you a lot of stress. The reason is that the indicator gives you the signals. You don't need to do any technical analysis yourself. Like, there is no analysis needed on your own part. Yes, the only thing is that it is not advisable to rely on one indicator. So you are going to be doing yourself a favor if you are confirming the signals given to you by this indicator, using other indicators or using chart patterns or candlestick patterns and all of that. All right, so basically, as we can see, the indicator gives us the signal. When it's time to buy, the indicator will tell you. When it's time to sell, the indicator will tell you. So there is no need for so much explanation because the indicator gives you the signal. So basically, as we can see, in addition to the pop-up alert, the indicator also gives arrows. All right, so when it is time to buy, you're going to see an arrow, an upward arrow telling you to buy. Okay, when it is time to sell, you're going to see a downward arrow. Can you see that? You're going to see a downward arrow telling you to sell in addition to the alert. All right, and then you just have to be watching out for the arrows. Basically, you just have to be watching out for the arrows. When you get your arrow, you can confirm with chart patterns or watch out for, maybe if you get a bullish signal, check if you're going to see any bullish candlestick pattern before you go ahead to enter a buy. If you get a sell signal, check if you're going to see any sell candlestick pattern before you go ahead and sell, right? And then I'm going to recommend that you combine the moving average, all right, depending on the time frame that you are trading on. Okay, that's going to determine the period of moving average you're going to use, right? If you are a swing trader, you can use 50, you can use 100, you can even use 200, depending on how long you want to be holding your trades for. But if you are an intraday trader, you can go with 20. If you are a scalper, you can also go with 20, but you work on a smaller time frame, right? So now we can see that using the moving average to confirm our signals, the Madro Golden Filter Indicator gave us a sell signal here, and the moving average confirmed it. So we could have considered entering a sell here. And then when using this indicator, the Madro Golden Filter, in my opinion, your exit signal shouldn't be the opposite signal. All right, for example, when you get a sell signal, do not wait for a buy signal before you exit because it might be too late. When you get a sell signal and you are in a sell trade, do not wait for a buy signal before you exit your sell trade, because The buy signal will not come immediately when the buy move starts. So you might end up not making any profit. Just look at this example. If you had sold here and you had exited your sell here, you wouldn't have made a profit, right? So when using this indicator, this is one of the limitations, all right? When using this indicator, I don't think it's best for your exit signal. So you have to look for something else to determine your exits, all right? And one of the things that you can use to determine your exits are support and resistance zones. All right, these are very effective exit strategies, right? So if you are in a sell trade, use the nearest support, or after you have calculated your risk and your potential reward, use a good risk to reward ratio and exit at the necessary place, right? And I'm going to recommend trading only in the direction of the trend. Okay, so if you have a bullish trend, please look for only buy opportunities. If you have a sell trend, please look for only sell opportunities, all right, to be on the safer side. Okay, so now in this example, we had a sell trend, right? So when we had a sell signal here, we had a sell signal here, so we would have considered entering the sell trade after the moving average gave us a confirmation, because do not rely on this indicator alone, all right? So we had a confirmation around here because the price closed below the moving average. So we could have considered entering a sell trade here and setting stop loss above the previous swing high. And then remember what I said, for your exit, use the nearest support, or calculate your risk to reward ratio and then use the appropriate support level to exit your trade. So if we had entered around here, we'll be risking about 350 pips, and then using this next support, this support zone, that will give us about 720 pips. So we will have a good risk to reward ratio. If we enter a sell here, we can exit our trade around here and we are good to go, all right, because it gave us a good risk to reward ratio. Okay, now in terms of a buy trade, let us just look at an example for a buy trade. So we have a buy trend here, right? We have a buy trend. Here. So we are going to be looking for only buy opportunities. So we had a buy opportunity here, and we should have waited for the price to close above the moving average. So we have possibly entered our buy trade around here, and then our stop loss. Our stop loss can be set just below the swing low, the previous swing low. And for the take profit, remember what I said, exit at the nearest resistance zone, all right? Unless if you do not have a good risk to reward ratio, that's when you can now target the next resistance. So in this case, if we had entered around here, our risk would have been about 240 pips, and then we should be targeting minimum of 480, right, for a risk to reward ratio of 1 to 2. So if we are risking about, okay, this should be about 210 pips. So this is about 210, or even 200 pips, about 200 pips. So we need a minimum of 400 pips, right? Okay, so we can see. So in this case, it would have been ideal to target here for our take profit, not here, so that we are going to have a good risk to reward ratio. So if we are risking 20 pips, we are potentially going to make 40 pips, right? So that's going to be a good one. And remember that when you are trading in the direction of the trend, the chances of your take profit being hit are higher compared to when you are trading against the trend. So there are benefits of trading in the direction of the trend. All right, so when using this strategy, when using this indicator, please stick to the trend. Okay, it is very important. It's very important to stick to the trend. All right. Now, let me just emphasize a little on risk management. When you are trading, make sure that you do not use an amount that you can't afford to lose. And then also make sure that you use good risk to reward ratios. Okay, like I already said. And then when you are entering a position, make sure that you limit the lot size. All right, do not over leverage, and do not use more than 2% of your capital in one trade. All right, so that in case of if you have maybe consecutive losses, you don't end up blowing up your account, or blowing up a large amount of your capital. And then in case if you have equal number of wins and losses, if you are using good risk to reward ratios, you're still going to be on the winning side. Okay, so it's very important. That's the reason why all these risk management strategies are very important. Okay, and make sure that you put them all in place. All right, if you want to be a successful trader. So that is it for this video. I hope you found this video insightful. Kindly like and subscribe for more trading insights. And don't forget to hit the notification bell so that you do not miss out on more trading videos like this. In the meantime, thank you for watching and happy trading.